Hello, good morning, everybody. Welcome back to the Prospero.ai stock market live streams. Sorry for the little tiny delay today. I had a bit of a network error when I was trying to get in, but I got it figured out here. Welcome back. Hopefully, everybody had a fantastic weekend. We have a lot of great stories to get into today. Hit that like button if you're excited for the stream and you couldn't wait, and we're here early, ready for us to begin. Whether you're watching on Twitter or YouTube, thank you. So let's take a live look at the markets overall today. The QQQ, SPY, and Russell are currently in the green. The Dow is in the red. The VIX is slightly up today, 3%. Well, I guess it's up a little bit, but it's down at 17 now, so well under 20 as we've been watching the VIX more closely since that volatility burst in the early part of April. Although the metrics for the SPY and the QQQ in Prospero still aren't looking all that great. Not much belief in this rally for our signals, and they're actually even lower today. The SPY is now at 4 in net option sentiment, and it had been as high as 13. Still low, but a little bit better last week. And now the QQQ, which had been as high as 49 on June 5th, is now all the way down to 19. So the signals are picking up some uncertainties, maybe. We're going to talk a lot about the talks going on with China today in London is something we're going to talk about first. The macro going on there. The overall markets now within 3% of hitting new all-time highs. Can that happen this month? We'll get into that. Maybe some of this uncertainty is coming from the Elon versus Trump slug match that just broke out ferociously last week. We'll get into that, what it means for Tesla, and maybe the overall markets. Maybe that's some of the reason why the net option sentiments are so low. And looking at ASTS, because ASTS stock has been up and up and up since this fiasco started. And I think it's being looked at as a winner if SpaceX actually does lose contracts. Maybe ASTS can scoop them up, but we'll get into all of that. Then we'll go over Warner Bros., which is going to be splitting their stock into two public companies next year. And they're going to have a streaming side and a studio side of their business. We'll get into what that means for Warner Bros. And why they might be looking to do this with the landscape of entertainment and streaming in 2025. Then IonQ we have to talk about because they are making an acquisition of Oxford Ionics in a $1 billion deal. So why is IonQ looking to acquire outside of what they're building within their company, being such an early startup themselves? Hey, George, welcome to the stream today.
Hello.
So we'll get into that and what it means for IonQ in the quantum sector. Then Sonova, a company in the solar energy space, filing for bankruptcy. And I have to ask George, is solar energy the worst sector in the world to be in 2025? Or can he think of any others that might challenge for the worst? And after that, two more topics. We have a lot of topics today, so hopefully we get to all of these. Microsoft hitting all-time highs. Which Mag 7 will be the next stock to get there as well? Currently, none of the other six besides Microsoft are at that level quite yet. And then last but not least, CRISPR and biotech. Let's take a look at that sector and that area of the market. Are they about to go on a run, as we've seen quantum and nuclear and a lot of other AI adjacent fields run? Can biotech harness the power of AI that these companies will need to create the innovations that their stocks are looking for? But today we'll start with what the overall market is doing, George. What do you, like we just looked at the Prospero net option sentiments for SPY and QQQ, and they're pretty low. QQQ at 19, SPY at 4, but the market just keeps on melting up day after day. QQQ and SPY in the green right now. How are you thinking about the uncertainties and the lack of faith, maybe you'd say, in the readings we're getting in the net option sentiment, but like the market just keeps kind of melting higher? So how are you thinking about that?
Well, I think you have to remember that net option sentiment is it can just be a warning sign, right? It doesn't necessarily mean that the market's going to go down that day. And I think that that's an important distinction. And why is it an important distinction? Like places could be hedging heavily and the market could still go up, right? They could still be, short options and long other things, could still be, buying stock, capitalizing on momentum. And I think, it's always good to kind of like intellectualize all this. And we always try to say that, right? And if you look at the market, it makes a little sense that even if there was still, buying momentum, and what we're seeing is there's a lot of this is retail driven, buying momentum. And I think you can look at a stock like Palantir, and I was reading an article this morning about how, institutions have really slowed down, buying it because of the valuation, but retail just keeps going, right? And I think this is a very, we're in a time where I think social sentiment and retail sentiment are more important than they've ever been. And I think we're definitely seeing, and have been, more worried institutions that are still willing to play this momentum, right? So I think both things can be true. Both things can make sense. But it's just where I think why institutions are hedged is what do we know about retail and momentum trading around retail, right? While you can have this directionality positive, it also means that when it turns, because retail is less valuation driven, it can turn fast and hard. Hence the hedging, right? People know that when this does turn, or if there is a negative news event, the market's going to fall hard. And that's, I think, what we're seeing in the positioning, right? We're not seeing SPY net option sentiment zero. We're seeing it we're seeing it in the, I think it kind of was in even the high, aughts last week. It's at 4 now, but it's not at 0, right? It's not. And when we've seen it at 0, it's just like, okay, shit's going to go down. It's only a matter of time, right? But I think that we're seeing that behavior, especially with everything else we're seeing. I think what we're just seeing is a cautious market that is worried about how hard things turn if things do turn. When they turn. I mean, it's only a matter of time that we're going to see a correction. How strong of a correction, I think, depends on the news cycle. But we kind of have been saying this the last few weeks. If you look at the markets when they were at their last all-time highs versus now, there's just a lot more risk in the market. And that means when it turns, the concern around those risks is going to be magnified, and the way the market reacts to it is going to be magnified.
So we are now just 3% away from all-time highs in the SPY, and the USA and China are holding some trade talks today in London. How closely are you going to be looking for headlines that come out of that? Do you think they have the potential to really move the market, or are we kind of getting used to these types of headlines now, and maybe they're less important? And then also one question for like the SPY net option sentiment has been fairly low for a while now. Would you consider ever lowering the bull level? So if you saw SPY pop to like 30 or something, would that feel more bullish to you than in the past since it's been so low, or are you feeling good about the 40 level?
I mean, we used to move them around, right? Because I think especially because like before last year, or sorry, I would say before this year, I thought a lot more about moving them around. But I actually like the stability of what it's saying, right? Where it's just like, okay, it's still like, I think if it's still like 10, 20, like it's still like you can have some bull days, right? But I still think the overall sentiment is bearish, and I still think it's there, to give people caution, right? It's like what we're saying today. Just an SPY of 4 doesn't mean that the market can't go up, right? It just means that there's a lot of downward pressure on the market. So I think it's important for people to keep that in mind, right? And even when it's been lower, we've had times in the last few weeks where we've been more bullish than bearish because we like other factors. We see QQQ net option sentiment is higher, right? It's a whole big formula. But I do think it's good, right? Because what is it there for? What do I use it there for? If I see them both go over 30, both go over 40, then I'm going to be a lot more relaxed with my hedging. And that's how I think about it. Like, I don't see, like, said differently, I don't see a problem with having a well-hedged portfolio, even if SPY net option sentiment is 20, right? And that's good for right now. I see no problem in, say, being even long short, right? Because I think what people have to remember, and why we like doing long short, we encourage people, to be on a journey to learn how to do that well, because it's not in everyone's toolkit right away. Why we encourage people to do it is, like, if you're long short, right? If I'm, say, 6 long, 6 short, right? I don't have to beat the market. My longs just have to do better than my shorts, right? So that's why we look at it that way. And for someone that's long only, right? A good way to look at it is, it's always a spectrum, right? So if you're long only, you could say, well, maybe I'm just going to pare down more to a cash position when I see this.
No, that makes a lot of sense. And I wanted to bring up early today the Robinhood and AppLovin event. They were being thought of as possible additions to the S&P 500 last Friday. Both of them left out. I think both were down over 5% today, as people were kind of getting excited for that headline that didn't come true. But I know we talked about it in our newsletter, and I just wanted to bring that back up and let you kind of talk about, the game theory aspect and how you thought about it now that the event has passed us.
Yeah, and for people that didn't read the letter, I'll give a little review of it, where it's just basically like, game theory, especially if you're playing this, is very important. And game theory is really just looking at the outcome and the logic of your outcome, understanding the odds, right? And why I think it's relevant for everyone, what I was saying is, like, for me, because I have such a good grasp on the signals and have such a high hit rate, close to 60%. If you're looking at even over the last 3 years, that, more of a toss-up event, that I really shouldn't be playing that, because I have such strengths in other areas, and I have no special ability to predict an index ad event. I mean, I don't think anyone does, unless, maybe you worked for S&P before and you have a really good sense of, like, what that committee's thinking beyond, say, market cap, right? But I think it's an interesting lesson, because you could be using the right logic and still not be optimizing the game theory. And I'll tell you why. And, like, the logic I used was basically like, I thought Robinhood and AppLovin were, good to be added last time, right, on the last rebalance. And, both of them were higher market cap. I think both of them were close to double their prior market cap. So I said, if I thought it then, why wouldn't I think it now, right? And that is logically consistent. That's using good logic. But, the better logic, as I described in the letter, was, well, I'm equally ill-equipped both times we predicted it, and I was wrong the first time, and I should have sampled that more. That should have been a reminder that I wasn't necessarily as good at that kind of thinking as I am other kinds, right? So I always challenge people to think in that way. And the other thing that didn't quite make it in the letter, that, because it was already kind of long, was that, our signals had just really gotten kind of like the Wolf bankruptcy. We'd been nailing things really well, and that, that can make people overconfident. It's always a spectrum. I think it's important to have confidence and conviction when you do things, but, you can go on too high of a win streak and get overconfident, and then kind of like, go back and forth. So I think it's really, really important for people to think about that. And for people to really, I think the most important thing is understanding what you do well, what you might do better than other people, being honest with yourself about that, and analyze your shortcomings, where you're wrong, how to do better. And I think it's going to be a while before I decide I want to start doing index ads again, predicting them.
It's a really interesting point that I don't think is talked about a lot in the investing world. And what I see is, like, almost being too confident, being too good, and then kind of maybe over betting, or like just over position sizing, or because then it's just one mistake can kind of ruin all of that momentum you had built, right?
Yeah. And I mean, for me, it's especially hard, right? I'm in this situation where, I'm about 100% up on the market at this, 6 months in, right? And when you're 100% on the market 6 months in, you've made 700 picks, right? It's hard to move the needle that much, right? Like something like predicting two index ads that could move the needle, and you find yourself maybe reaching for yourself, like, oh, I don't want 100, I want 150 above the market, right? And everybody, whatever they're doing, they have those kind of instincts. But if there's one piece of advice that has worked really well, that's kind of I don't know if I've ever told this story on the live stream, because it's kind of like a weird thing maybe to admit for someone that's making public stock picks, but here goes. It took me a while to switch from an attitude of I'm just lucky, I'm on a good streak, to like I've really got something that works. It works on an ongoing basis here. And I'm talking about the Prospero picks. I'm even talking about 2 years of good performance. As I started doing the third, I started to be like, okay, like maybe you should give yourself some credit that you figured something out here. And keep in mind, by the time I started making these stock picks, I had already been an investment professional for about 20 years. I had been building AI models for stocks for almost a decade. So yeah, it took me a second to really give myself the credit. But what I'm saying is, obviously that was helpful to me, right? If you're always kind of challenging your own system and challenging your own beliefs and saying maybe you don't have this figured out as much as you think you do, or you'd like to think you do, right? You're going to be better off, I promise you, than if it's the opposite, right? Than if you're overconfident, always, right? Because at the end of the day, what happens if you're challenging yourself? If you're saying, maybe I don't have it all figured out, you might miss some opportunities, right? That's the cost of that. And at the end of the day, it's better to miss some opportunities than reach, because you miss some opportunities. If you stay in a smaller comfort zone, you should still do very well, right? Because in my comfort zones, all the picks I make, it's still pretty broad, right? I still make a lot of picks. But like, that's an important distinction, right? You reach out of your comfort zone, that's when you start to face the big losses. When you like really reach, when you really might miss something broad. Whereas it's like, it never really hurts to shrink the problem, shrink your comfort zone, what you're actually really confident in what it is. And I think that that's the best way you'll see consistent returns, because like, even as I built Prospero and I released things, my comfort zone was what I let other people use, what I let other people access, right? It had to be very well tested by me before I said, okay, I can let other people use this. All of the signals, right? All the signals were probably like, even though I had worked on the data science underlying them for a long time before that, the actual signals were probably like 2 years of just me testing them before I let anyone else use them. That was my comfort zone, right? And I was shrinking it. And I was saying like, okay, until I can identify all these problems. And that's what the newsletter was when I started writing it. I was just starting to say like, okay, I think I know these patterns well enough that I could start describing, teaching them to other people. And those that have followed me for a long time know that even that process has evolved, right? But I had to start somewhere, and I had to make sure I had the right comfort zone. And if you go back, like, I don't know how far people can go back. I have access to everything. I think everyone can. But if you go back and look, like when we first started to do it, it was a little more disorganized in terms of like, we didn't necessarily have a screener. I was just like picking I think it was like one stop, one bull and one bear at the beginning. But the process has obviously evolved. And that's the right way to do that, right? You start with something simpler that's in your comfort zone, and you figure out how to keep, how to make small incremental changes that like slowly expand your comfort zone. And you'll do well that way. Everyone does well that way. It's the same process.
And so we've got a comment from Jonathan in the chat. He's asking about Meta stock. Net option sentiment and upside have been on the uptrend, and downside has been decreasing. How much higher can the stock price go?
Let's take a live look at Meta. I mean, everything's looking pretty good. Like, yeah, that downside decreasing is pretty. I mean, we've seen this story with Meta, right? Like, I think when you look at Meta, right? And it was funny. I was in a Settlers of Catan tournament for Tech Week last week. And I was talking to someone talking about the platform, and I was like, what stock's the best in Prospero? And I thought for a second, because I always want to make sure I'm like cycling through and thinking about the problem well. And I was like, Meta. You know what? It's been Meta. And then I started talking about all the reasons, and he stopped me, and he was like, that's the biggest stock in my portfolio. You don't need to pitch me on Meta. But yeah, I mean, if you think about it, and just to make the quick case again that I've made here many times, right? Their ad business, like look at Google's ad business around search, right? That's threatened, right? Meta's got their own little universe and their own, like they're getting better and better at targeting. Mark Zuckerberg is talking about his agents replacing ad agencies. But yeah, throw that out for a second. They've got their own little universe, right? Their own little ad moat, right? And their users just keep getting bigger. Like you look at their engagement on both Facebook and Instagram. Like I think they pretty consistently get, more users, more time engaged. Like it's just a very strong core business. And yeah, they're doing well in open source. Like we talked about. I think one of the big things that resonated for me was when we heard about DeepSeek, that they were using Llama, right? And I think that's where you say, okay, right? I think, it was a big moment for China. I think if there was other better open source code in China, they would probably use that. But what they were using Llama. I don't know if that's still true. I haven't followed the DeepSeek development that closely. But they just have a very, very strong business, and institutions stay bullish on them. And that's why we kind of use those metrics. We've talked about it before. That's why Meta's one of our best case studies, right? Because as it was going up and we held it for years, you know how we do things a little on and off, but it was probably the most consistent long in our portfolio for the last, 3-4 years. And it's always like, when I see the market doing better, when I see, say, QQQ net option sentiment or SPY, like the first place I look, if it's not, and it's like, oh, I think it's time to add Meta. Again, it might have had a correction. I only drop it if I see like momentum score, I see net option sentiment softening a little bit. But the second I see a stronger market, I'm just like, okay, time to get Meta back in. We don't want to miss the run up for it. And yeah, that's just because institutions they always seem to stay bullish on it, and Meta always seems to reward them for that. They always seem to deliver. And until that changes, and that's the thing. I think last time I dropped Meta, it was like a few weekends ago, and at an 82 net option sentiment. That's just my threshold for it. It's so strong that I'm just like, if I see it soften a little, I'm getting out, because institutions are normally so bullish on it. But I always say, and this is challenging with Amazon, I always say, like, I love Amazon's business. If you're going to own a stock for 10 years, it's Amazon, right? Just because, like, I'm so confident that, like, half of America could burn down or like whatever, and Amazon's still going to, Amazon's going to be like, putting out the fires with their robots or something. I don't know. And there's a really funny comedy routine that I saw recently in a short that was just like it starts with like I'm pretty sure like some people are talking about like Jeff Bezos has too much money, whatever, but he's like, I'm pretty sure he has your money. And it's like, and I'm pretty sure you gave it to him happily, just because you didn't want to put on pants and you just wanted whatever you wanted to come to your door that day. And I think that that's a really funny way to describe that business. But, Amazon aside, and this is kind of the contrast, right, of Amazon and Meta, right? Amazon has that, like, it's so stable and it's got that 10-year, and like it's got that stable 10-year thing. I look at it, it's almost always overpriced, right? But go and look at Meta. Meta's PE is consistently under Amazon, right? And it's got like I'm pretty sure Meta, like as far as I can look back, it's growing more than Amazon. Meta started to do dividends. I don't think Amazon does dividends, right? There's all these little things about the business where you're just like, okay, like maybe Amazon in the next 10 years, just because it's like so stable and you might not get the same price appreciation as a Meta, right? But 5 years, you're looking at Meta just because it's such a stable business. For whatever reason, it continues to be kind of valued on the lower range of PE. I think just because communications doesn't get valued as high as consumer cyclical, which is kind of crazy if you think about it with all this tariff stuff. It's just like, why is Meta still a lower, PE than Amazon? That's why institutions continue to love it, right? Because it's got that growth, and you routinely see it at good value relative to the rest of the Mag 7, and that's why I have confidence in it.
Well, I had this question for you today of Microsoft is hitting all-time highs. Which Mag 7 will be the next to do so? I'm wondering if Meta is your pick. And you mentioned Google, and it made me think about, I've been noticing that Sundar Pichai is kind of going on like a podcast tour. I think the only way you can look at that is that Google is feeling the pressure, or like they're understanding how the markets are viewing them negatively. And maybe they're trying to actively switch that around, and maybe that's a good sign. They're taking action. But I did notice that he was on Lex Friedman recently. If anybody wants to watch that, it was very good. They talked a lot about AI and the tech and business world and all of that. I'm sure our viewers would like it. But what do you think of Google? Do you think they're actively now reacting to like how their stock has been viewed? And then which Mag 7 do you think will be the next to hit an all-time high after Microsoft has?
I mean, I think it's Meta. I think it's going that way. Sorry. Yeah, I mean, we just talked about all the reasons. I think it was we do this ranking in the newsletter of how close something is to the what week high. I think it's the 52-week high, right? And Meta's like, I think in like the 7th percentile now. So it's getting close to there. And yeah, I mean, the concerns with Google are obvious, right? I mean, I'm pretty loyal to Google. I talked about how I like switched back to it, but it's just like, there's certain things that I previously used Google for that I just don't anymore. And I don't think I'm going back. I don't really love the Gemini product. So yeah, I think that there's serious concerns. And I think, you look at the valuations. I mean, NVIDIA looks better, right? NVIDIA would kind of be my second choice. Like, it's looking like it is getting more value. It got a little too hit hard by the tariff stuff. But like, I think that's what's so interesting about this market. It goes back to where we started with Palantir. Like, this is the most retail-driven market I've ever seen by far. And right, you have like Tesla at that crazy high valuation, even though sales are falling. You see Palantir, like you see a stock like Palantir, I think taking some of the retail attention away that used to be in a stock like NVIDIA, and you see these other ones just like creeping up. And I think it's interesting because I think a stock like Meta is never going to become the retail darling. And it's kind of just like a funny contradiction with Palantir. I mean, I don't really like the business model of Palantir is amazing, but I can't say I really like all the projects that they work on. And I think the funny thing about the retail energy here is I think a lot of people don't like Meta because of Mark Zuckerberg. Like, this is why I think it would never take control, like hold of retail. They don't like Mark Zuckerberg. They don't like that it like spies on you to do ads, blah, blah. But then you have all of these people just like, pumping Palantir, saying Palantir, when Palantir now literally has a contract to like look at all of people's personal data and basically spy on them and extract results, not to serve you ads, but to do God knows what for the government, right? And then you have like nobody seems to have a problem with that stock. I think it's the same kind of people that are just like Meta spies too much on people. That also are just like Palantir forever. And I think that that's just like there's all these ridiculous contradictions in the market. And I think some of it is just like where people are aligned on who they believe and what they do, and like, you know, the tribes that are being developed. I mean, but personally, I just think it's like I actually struggle. Like I'm pretty much are calling Waymo cars and burning them. That is interesting. I don't know why. But I mean, is that like an anti-robot thing? Anyway, I think that it's just, if there's any company that kind of like, you know, bothered me morally, sometimes I'm like, I don't really want to add to that portfolio. I can be a little hesitant on that. And for a while, I mean, this is a funny part of the story. Like for a while, I was like, I don't want to add Palantir. But that's when the signals didn't look as good. As the signals started to look good at the end of the day, like, and I had this conversation actually about Meta when I said maybe 2 years ago, I was like speaking at an event and someone was like, what stock? And I was like, Meta. And they were like, well, I don't really like how they handled the election, and I don't really like this or that. And I was just like, look at like Monsanto, look at all of these like companies in the S&P 500. Like, how many do you really think are morally good? Right? I think if you're looking for morally good, there's not many stocks you can own, right? So I guess at the end of the day, you have to look at where you can make the most money. And I was like, look, make the money on the stocks, give to the charities that you want, right? And I think that's a good attitude. But I do actually find it funny that I definitely see some overlap in the same people that are just like, we don't want the nanny state, don't buy Meta, but are just like Palantir. Like, I definitely think some of the same people are doing that, and it's kind of funny. Well, no, I started adding that too. I really hate Robinhood, but it looked good enough in the signals. I started adding it. Yeah, Palantir and Hood were like the immoral stocks that I didn't used to add. But like at the end of the day, and like, you know what? Some of it is just like the practicality. Like, we're in a tough market. Retail loves those stocks. And it blows my mind. Like I was just on Palantir. It blows my mind that the same type of people that invest in meme stocks when, you know, Robinhood was kind of like the first and most egregious when they turned off the buy button. It's just like the same type of people are just like Robinhood. And it's just like, I was actually talking to someone about this the other day. And I unfortunately think it's just the same thing we often deal with everything. I think people are kind of lazy. And I think anything that makes options trading a little easier, as Robinhood does, they're in a sleeker interface, they'll do that. Even if it flies in the face of their stated goals of, you know, a more balanced system for retail investors. Robinhood is basically the antithesis of that. 33% of their revenue goes to Citadel, right? And that's not to help retail investors, in case I didn't really draw that line well enough. And you could say payment for order flow exists everywhere, but 33% of Vanguard's revenue is not from Citadel. 33% of Schwab's revenue is not from Citadel. So it's just like, yeah, I mean, I would never use Robinhood for that reason. And I think a lot of people that care about retail rights use Robinhood, and that's always been a puzzler for me. And then, yeah, you look at this, like, as retail investing is getting more popular, Robinhood's popularity is rising. And at the end of the day, it's just like, I think I wrote an article on this at one point. It's just like, this is how situations get worse, right? All these people want better conditions for retail investors, but they don't vote with their dollars. And, you know, at the end of the day, I guess in a harder market, I get less picky. But I would still never use Robinhood. And you could also make the argument that I'm not really investing real money in it. I'm just picking it in the newsletter picks. But if I'm being real honest, if I was managing this portfolio for real, I would probably manage it the exact same way as I'm managing it in the newsletter picks. And I think that I think people would probably find it strange if I didn't answer the question that way.
So you've been dropping a lot of heavy hitting lines. It's going to make my job very easy making shorts this coming week. A lot of these, these unspoken truths I feel like we're revealing today. And we have a lot of viewers. So let me just say, everybody, thank you for watching today. We are 8 subscribers on YouTube away from hitting 2,500. So a lot of our viewers watch on Twitter. So if you guys want to head on over to YouTube and subscribe there, that would be awesome. And I hope you're enjoying the topics today. I want to bring up Tesla and Elon versus Trump, the battle that broke out ferociously last week after we were highlighting it, and you were even kind of highlighting it more so than I was even before that, really that one day where it went crazy about how the tensions were building. And then Tesla stock declined 15% the day that, the Twitter slug match of words broke out. How do you feel about Tesla going forward now? Because how you were talking about always before this was like, yeah, they have all these problems, but they have the support of the regulation and all that. And now that but is probably no longer there. So I don't know. What is Tesla? What is the state of Tesla to you now?
Well, yeah, I think it's kind of funny. It just shows how sometimes you should go with your first instinct on something, because we owned Tesla. We got out of it quickly when net option sentiment soured last week. But I kind of saw that first, like, Elon Musk commenting about the bill, and I was like, here it comes. Like, both of these guys don't really like to be challenged, and one of them just fired a shot, right? But it took, and I think that's the big difference with it. Just like, it's interesting because Trump has this kind of persona that he's shooting from the hip. And I think that's what a lot of people like about him. But, like, in this battle, like, I feel like Trump is hurting Elon a lot more than vice versa. And even if, like, you look at it and Elon's like, well, Trump was in the Epstein files. And like, I'm pretty sure that, like, everybody who was going to believe that already kind of already believed it. And everybody who didn't wasn't going to. So I don't find that to be that damaging. But I do think, like, Trump kind of confirming rumors that Elon Musk had a drug problem. I think that's a much bigger problem for Elon Musk as, like, the head of some public companies than it was for Trump. So, and I think it's kind of like, I think it's kind of interesting how it all played out, and it seems to have died down. And I think probably both people, even though Trump's, like, I think didn't face as much from this in terms of negative consequences. I think both people are probably happy it's calmed down a bit. But yeah, I mean, I haven't checked Tesla net option sentiment today. Like, it's at 61. It's recovered a bit, but it's still looking very, like, highly volatile. I do think with upside as high as it is, we're definitely looking at a situation where, in the long term, I think both the AI stuff, like, full self-driving, things like that, that's coming out. I think people have kind of high hopes for that as it relates to Tesla in the long term. And they think probably if these bets are live, they're thinking it's going to get sorted out in the long term. But I'm probably not getting back into Tesla, assuming that that's the time for the price appreciation, until I see net option sentiment go to 95 or 100, until I'm pretty sure this situation is completely fizzled. So probably, like, I would have to see this, like, fizzle out for at least a month for me to be pretty sure that it had.
Well, in the war of words, Trump said, the easiest way to whatever is to take funding away from SpaceX with Elon. And right when he said that, ASTS stock started rallying, and it's been one of the better looking, I feel like, high growth stocks in Prospero for a while. It's now up 16% today. Is that the best hedge if you have a big portion of Tesla in your portfolio and you're like, gosh, I'm nervous if Elon and Trump go back at it, to just add some ASTS? And it's like the more, I guess SpaceX and Tesla are kind of similar in the market's eyes. Like the more they lose, the more ASTS will win. And it's kind of like a good hedge, but it's also got like its own high growth story.
I think it's tough, and like why it's tough, and honestly, I like Matt, who is the other writer for our letter. He's always like hyped on ASTS, and I probably should have listened to him on Friday when he said it was running again. But if you look at ASTS, right, it peaked a little while ago at 38.09, then it had another little peak at 35.49. And then now it's at 36.41, right? So I think the hype cycle for ASTS tends to top out here, right? So I do absolutely think that it was a good trade like 2-3 days ago, but I don't know how much this hype cycle can carry it, because I think people start to get nervous at the valuation when it starts trading at these prices. I mean, this is a new thing. I mean, it's really running, and net option sentiment is high. Anytime I've traded into a stock, and like I've had some big gains, more big gains than big losses on ASTS, but you do have to observe some patterns. I've had some big losses as it gets out to these higher levels, and just the valuation can no longer support it. So I do think it could be a runner on an ongoing basis, but I'm nervous based on the valuation patterns I've seen of it in the past.
So another stock I wanted to bring up today, because they announced they're going to be splitting into two companies, is Warner Bros. Discovery. They're splitting into a streaming business, basically purely streaming, and a studios business. So the streaming side is going to have a lot of their movie properties and then HBO Max. And then the other side is going to have CNN, TNT Sports, and Discovery. It seems like they're kind of like throwing out the garbage in one company, like the older kind of entertainment industry, and they're kind of making this new streaming company. Is that how you view it? And it's like, why would you ever invest in the legacy kind of side of that company that's going to spin out versus streaming one? And is that kind of how you feel like this spin looks like to you?
Do you know about the relative value of the two businesses and their revenue?
I do not. I could try and find it if while we're live here.
Let's ask ChatGPT.
I'll ask Grok.
I have Perplexity Pro now. I haven't really gotten to dig into that, but I'm not logged in. Let's see if we get different answers here. That would be funny. Oh, this is not the right. Okay. So what is it? It's Warner Brothers streaming and the rest?
Yeah. So the question I typed in was Warner Bros. Discovery is spinning into two businesses. What is the revenue and market cap projected for each new business? That's what you wanted, right?
I'm going to say streaming versus core business. Let's see what ChatGPT has to say. We're live. Stop thinking so much. Okay. So streaming turned. Oh, yeah. One is dying. So streaming turned a $600 million profit in 2024 versus 103 in 2023. And then you look at the core business, linear networks plus studios, revenue dropped 6%. Yeah, so streaming is 2.65, up 9%, and linear networks is 4.8, down 6%. Studios 2.3, down 18%, right? Yeah. So this is an interesting move, and I'm glad we looked at the numbers, because you always have to look at the numbers before you talk on something like this. This is a strategy that some businesses do sometimes to make sure that their more profitable business can get hype, right? What are we talking about with Palantir, with Tesla, all this stuff, right? If you have growth and some hype, you'll get retail and you'll be valued more attractively. But retail institutions, like, they want to see growth, right? When you had these larger businesses, the linear and the studios losing ground, right? And the other one gaining ground, even as a smaller business, you net out to shrinking as a business overall. So they're just trying to take their growing business, separate it out, so the market will value it at more attractive multiples. I mean, the flip side to that is that streaming might have been dragging up the other company in terms of like not showing less growth. I mean, less decline, because you're combining it with a better business. But, right, what I would guess, what frequently comes along with this kind of thing is when you break that out, when there's more declines, you start hacking off costs in the declining business, right? And a lot of the times that comes at the executive middle management level, right? Because the growing business, they can, they want to be like, we don't want to be associated with all your cuts and bullshit. We're doing well, right? And we don't want to mess with that, right? But the rest of you, like, that's when you start seeing a lot of headcount reduction, maybe some people taking pay cuts to stay, things like that. That's a practical reason why some of this happens. We said the reason around like momentum, wanting to be valued around the market, but also dividing up the businesses. It can help you, take, say like a 20% cut to all those businesses, and you want to separate them out because you don't want streaming to take a 20% cut to their business because they're doing well. I don't know how the stock price responded to that, but it does make sense.
It was up a little bit, and just like IonQ also, which had news, which was up this morning. So IonQ will be acquiring Oxford Ionics in a $1 billion deal, which is mostly stock. And I was curious to hear you talk about this because I feel like you have a little bit of a more nuanced view when companies acquire outside. But like what IonQ said, why they're acquiring this company is it accelerates their mission for full fault-tolerant quantum computers with 2 million physical qubits and 80,000 logistical qubits by 2030. So it looks like it maybe will help them be on their 5-year mission here. Are you more bullish on IonQ after them acquiring a company for $1 billion, which I think, if I'm not mistaken, IonQ is about a $10 billion company. So that's a pretty big acquisition for 10% of their market cap. So what do you make of that story?
Yeah, I mean, typically you're right. I'm a little bit like, oh, look at the numbers. Like I say a lot of stuff because acquisitions aren't necessarily good or bad. The market frequently reacts to acquisitions as if they're all good. Hold on, I'm adding Palantir real time. It opened the day at 70, I think 74 net option sentiment, and I saw it go up to 82, and then
now all of our viewers know your tendencies. You talk bad about a company, it goes down a little bit. George moves the markets, and then he adds it later in the stream.
I was watching it. No, I mean, you can't ignore this. It's crazy.
That's funny.
What's the White House bill? Did it pass? So I think for a company like IonQ, and we talk about this before, like, hey, if you want to bet quantum, right? There's going to be some winners. We don't know who the winners are, right? A good way to assure you're the winner, right, is eat your promising competition, right? That's a smart thing to do, right? And I'll explain to you why I'm normally sometimes not on this side and why I am on like this, like kind of objectively promising regardless of the price, right? Normally I say, what's the price you paid, right? Because I say what the price you paid, like one of my seminal analysis analyses in my understanding of stocks was this company called Group One Automotive. And they ran like car dealerships, right? And on the surface, it looked like they were a growing company, right? But they were just acquiring more car dealerships every year, and their revenue would increase. But actually, like their same store sales, right? Basically, like their percentage growth out of the existing business was actually decreasing, right? So they were basically making acquisitions to cover up the fact that their core businesses and these new ones that they eat, they would actually make them more inefficient, right? And I actually think that was the second hedge fund I worked at, and I actually think my boss assigned me that to teach me that lesson. I think he already had decided he had passed for the most part, but I think he just wanted me to do some. I think he took a core glance. I think this is what happened. I think he took a core glance at the numbers and suspected that happens. But I kind of dug into the numbers. Why am I telling that story? Right? Basically, because if you continue to like pay for these kind of businesses just to like show that you're growing, actually not only will the market eventually figure it out, but you will look more and more inefficient over time, and you'll actually have to pay more and more to grow, right? Because when you're acquiring businesses at the beginning, you can just be like, oh, I want to acquire the ones that make the most sense relative to mine. Like, for example, let's say you're marketing for these car dealerships, right? If you have a lot clustered together, you can spend marketing in local things more efficiently, right? You can maybe save on shipping costs if you're shipping cars in between or buying, used cars, moving them to different lots, things like that, right? You can have more efficiencies. But the more you acquire, the more by definition, you're almost acquiring dealerships further and further down your list, and you're inherently becoming more inefficient. So back to IonQ, why is this a good acquisition for them? Because nobody cares about how efficient these companies are right now. You're betting on something that's going to happen in 10 or 20 years. So all you have to worry, there's a concept like top line and bottom line, right? For IonQ, all they're trying to do is create, like, people are already like over forecasting their top line and overvaluing it to like such an extent. Like, the bottom line doesn't matter. That's where you evaluate whether an acquisition is worth it, on the bottom line, right? Nobody gives a shit about their bottom line right now because they don't even know if IonQ ever is going to have a real product or when it's going to come, right? You're never going to hear someone talking about it. And in fact, they would be stupid if they did, right? If you're talking about IonQ and they were just like, oh, well, what do you think the profitability is going to be? It's like, that's a stupid question, right? We don't even know if this is a real product yet. We don't really even know when people are going to use it, how efficient it's going to be. If there's going to be some other compute that's like on a whole other level than quantum computing, right? You're going like deeper into, maybe we'll have like, there's a funny Rick and Morty episode where these Google boxes and Flugel boxes where like there's these little universes when people are like pounding on the blocks to generate power for another universe. For all we know, like, quantum, where we're like trying to harness it in weird ways, we could be enslaving other societies, little small societies, like, to get our power. That's only to make the point that it's just like, we don't even know enough to know if it's a real product, to know if it's profitable. So those kind of acquisitions, right, are almost always smart because they're talking about hype. Eating one of your competitors is going to create more hype. It's going to raise that floor. It's going to take that analysis, right? Or we're talking about, like, I don't know if it's going to be that company or more. The more you eat, the more likely you're viewed as the winner, and the more people will pay a premium for that as they view you as a more secure, higher chance winner.
Well, first of all, I have to get to the Rick and Morty point because that's my favorite show, and it just started making new episodes again. So thank you, Rick and Morty, for all of your wisdom you depart on us. But another company I want to hit on because I think they're similar to this sector is probably similar to how you're talking about IonQ and the quantum stuff, is CRISPR and the biotech area of the market Are they on the precipice of harnessing AI in a way where these companies can finally deliver on the growth that I feel like a lot of people have been waiting for the biotech industry to offer, CRISPR and many other companies? And we've kind of, I feel like it's similar to like the quantum, the nuclear. It's like all of these other industries that are going to benefit from AI and the growth of AI. And so, how are you feeling about biotech space and CRISPR and a lot of those areas of the market with the AI future upon us?
First off, I actually, as you said that, I was like, I think that was one of my better wanderings. I went from used car dealerships to enslaving other universes for power. Some pretty old tech to some pretty new tech, you might say, and on to more new tech. I think this is actually a good back to back, right? Because you look at something like Ion Q, and quantum computing is like something that if it exists, the demand for it is infinite, right? Infinite, right? Because everybody wants more compute. Everybody's talking about wanting more compute, right? If one country has it and another doesn't, that's actually like a big defense problem, right? Like we've talked about, like I always hear in reference to that, like if someone gets a quantum computer online, they can pretty much just like crack everybody's Bitcoin wallets and steal their money. But why do I make that point in terms of infinite demand? CRISPR technology has some difficult moral implications. And as a result of those difficult moral implications, it's got some difficult regulatory circumstances, right? And it's kind of a funny contrast because, like, in the example of a quantum computer, no one can really stop you especially if you get it early. But when you look at CRISPR, right, it's been there. Like we've been cloning things for a while, and I believe in China, it's being used more than it's being used here. And I've read about some interesting applications, right? And what do we always? It always comes down to modeling, right? And it's challenging to model a company when you don't actually know what the adoption will be because of moral regulatory concerns, and that's what's always challenging with any biotech, right? Some biotechs, like it's a little more like, I would say it leans a lot more regulatory than moral, and regulatory stuff is very, very hard to predict. And that's what people that have watched me for a while know. That's one of the things I say. Like biotech is something that historically I've struggled with the most, and I kind of avoid big bets on it, especially as a result. And I'm much more likely to short something than go long. But I think that makes it really challenging, right? Because the tech is here, but when are we really going to use the tech? When, like broadly, how much, to what extent, right? Like we could probably like start editing, we're already like testing for things, we could probably start editing a lot of embryos broadly, not in the not too distant future, right? Is that going to happen? I don't think so. And I think part of the reason it's going to happen, why I say regulatory and moral, is like, I think even if regulations were there, there's a lot of people that don't want to do it. But like, that's what makes it hard, right? People's tastes change. Like there was a time when there were a lot of people that said, I'm not going to let my kids use the internet at all, right? And that was definitely moral grounds, developmental grounds. Like, how well is that working now? How many people are like, if anything, it's just like, I'm just going to keep it away until like in a smaller way until high school, right? So it's just like, it's one of those things that the boulder can start rolling down the hill, right? All of a sudden, if all the people around you are, editing their children to make them, less like, there's an argument to be made for it, right? All of a sudden, if the moral hazard declines, then more and more people might start doing it.
Well, we have had over 2,300 people tune into today's stream, and I think it was a great one. So if you guys enjoyed the topics we discussed, give it a like, whether you're watching on Twitter or YouTube. But it is now time to do the switch over and get into the model portfolio update. And we already got our first glimpse with an ad of Palantir, but what else will we be changing in the portfolios today? So we'll see George on the other side when he tunes back in the Prospero AI lab. But everybody stick here with me. We'll be right back with George. We'll take a look at the net options sentiment signals in the Prospero app for the SPY and the QQQ. Let me look at the market as well. It looks like another low volatility day. I see the SPY, QQQ, and Russell are all still in the green. The Dow is still in the red, very slightly now though, almost in the green itself. But S&P is up 0.14% today. QQQ up a quarter of a percent. So not much movement in the overall markets right now. Let's look at the Prospero signals and see if they are looking any different than they did just about an hour ago when we checked in the beginning of the stream. Okay, the SPY is now at 7, so it's up slightly. It was at 4 at the beginning today, and the QQQ is at 21 in net option sentiment. And I think it was at, what was it, at 17 or 19 before? Either way, both are in similar ranges to the beginning of the stream today, both still in the bearish level. So how long can the Prospero signals signal that there might be some danger to come, and the markets kind of just hang out, go melting higher? So one of these things will have to change eventually. We will see. Let me look at the Prospero short-term bull list, which if you guys are new to the Prospero app, it's the first thing you see when you open up the app, and it's the hour pick screen. And there's 4 different tabs you could click on the top, but this one is the first one that you pop into. Let's see if there's any new companies that aren't on there often. Novo Nordisk is on there. That's a new one I've seen. Disney, a lot of chip stocks. There's ASML, AMD, Nvidia, Intel is on there. Interesting. Wow, a lot of chip companies. 4 of the 10 are currently chip stocks on our short-term bull list. Apple is there, and I know they have their WDC today, so maybe people are getting excited for Apple if they'll mention anything about their Apple Intelligence today at their. Actually, I don't know when that starts. Does anybody know what time Apple is supposed to start that conference they're holding? And lo and behold, at the top of the list, leading in basically every signal that's available to look at on this screen, Meta. 96 upside, 91 net option sentiment, 86 social, 9 downside, 90 profitability, 99 technical. It's basically a leader in every category. It's wild. I saw a lot of your comments today, Mario, Bob, Kairos. Thank you guys for commenting on YouTube. I didn't get the chance to bring them up while we were talking, but definitely saw them and appreciate you guys commenting on the live chat. Alrighty, folks. We're now just waiting on George. He'll join back and we'll get into the model portfolio update. So you get to see the live ads and drops. Oh no, I just got a note. It said we're having trouble streaming to Twitter X. This may be an issue on X's end. We'll keep trying and let you know if it gets resolved. Interesting. Well, hopefully if our X viewers got disconnected, they'll hop on over to YouTube. But it looks like maybe X is experiencing a down, an outage right now. If anybody's watching on YouTube, is it still looking good? Or am I alone now? Live without the Prospero fam. Let's see if there's any big moves occurring in the market, like ASTS, which we highlighted, which was up 16%. Let's see if they're continuing higher. No, up 15.5% now, so about the same. Let's take a look at the Mag 7 stocks. How are they moving today? Apple green, Amazon green, Meta green, Microsoft, Tesla red, Google green. Let's look at Nvidia as well. Nvidia is green, but off the day's highs. We didn't cover Bitcoin at all today, so let's take a look at Bitcoin. Bitcoin is up today, about to hit 108,000, up to just over 2% on the day. Bitcoin's back very close to all-time highs again. Probably similar to the SPY, about 3% away. I think it peaked at like 112 maybe, just a little while ago. We didn't talk about the Circle IPO either. We'll have to get into that maybe Wednesday if the Circle IPO looks to repeat the performance of CoreWeave. Ah, George said he doesn't see me. Are you in? Let me text George back. Sorry, everyone. Are we back up on Twitter? Oh yeah, it says we're still live. Wait, what the heck? Nobody can hear me?